All right. Good morning, traders. Excuse me. Good morning, traders. Happy Sunday. Happy Mother's Day to any mothers out there. You should see my screen, hear my voice. Good morning, Doug. Good morning, Gabe. Hi, Steve. Good morning, El Jago. Yes, thank you. Good morning, Gabe. Good morning, Jamie. Do we have any of our mothers here? Let me see. Let me check my participant list. Sandy. Sandy, happy Mother's Day. Maybe Sandy can't hear me. All right, let's just jump right in. There she is. Good morning. Hope you enjoyed your Mother's Day. I think yours is almost over. Officially, good morning and happy Sunday. Welcome everyone to the Options Income Launchpad Sunday Market Insights. I'm Scott. I'll be your host. As always, what we do is for education and illustrative purposes only, nothing intended as a recommendation to buy or sell. We're not brokers or advisors, and so nothing we do should be considered personalized investment advice. Any decisions made based on information from us or the platform should be taken at your own risk, yada, yada, yada. Okay. Okay. Let's market posture. That's the core thing. Let's do a market posture. We'll look at the economic calendar. We'll talk about searching. We do have, I need to add it. Maybe I'll do it this week. We did some searching on three sectors, industrials. I'm going to go through them and add them today. That's going to be part of what we do today, if possible. If we go fast, watch list maintenance. We'll build an early week opportunity list, of course. As always, today is 5/10/26. Okay. Let's go. Oh, trading plan section of the week. Sorry. Last week we were on section 6. This week we're on section 7. We're almost done. One more week before we circle the loop once again. The section we're on is 7, which is analytics. Analytics. The good news is analytics is really about developing a routine and a cadence. It's not actually the work is done. It's you processing it to say, oh, I see this pattern in my numbers, therefore I'm thinking this, or I'm going to try this. And it's just, it's looking at the deep. So you've taken the time to build the structure, build the logs, have the numbers. This is what are you going to do with the numbers? What are you going to do with it? How are you going to use it to help you? That's what the analytics, and then the analytics then transitions into the last section, which is goals. Right? We now have analytics and observations and theories, and we're going to say, right, we believe that we're building levers. If I pull this lever, then I expect this to be better or worse or whatever it may be. Good morning, Victor. Good to have you. Good to see you. And anyone else who's come a little later, good to see you all. Let's dive in. We'll get to some of this other stuff. We're going to obviously start. We'll start here on the Oracle. And we'll get the Oracle to the first section. We are going to need this and this updated. Okay, long term. I fear I got complacent with my Thinkorswim because the last few weeks it has not needed to reset on Sundays, and then now it needs to reset. So give me a second. I'm going to get that going here, end it, and we'll start a new one. My goodness. Okay, let's see. Excuse me. All right. All right. I didn't see which one I logged into. The wrong one. Of course it was. All right, that's all right. We're gonna get cracking here. We do need this reloaded. The good news is it went fast. All right. Oh, 05, 10, 26 chart for the long term. And let's get to 3-year weekly. Okay, this will be an interesting one. So my thought here was it didn't go far enough. I needed to get at least halfway into this before I start thinking I'm going to give it this score. I need to see a pullback. I'm not convinced yet. I'm still at 1.25. And the model's already at 1.5. So I don't see how I could possibly go to 1.75. And if it does, it may need a conversation about trends being a sequence of higher lows and higher highs. But I'm leaving mine at 1.25. I want to hear from the group. Where are you? A full 2 points on Gabe said on his. Good morning, Greg. Full 2. Yeah, I mean, that's It's like, how can we possibly assess the trend at a full two if we haven't even seen a low in a minute? So yeah, I agree. Excited teenager syndrome. Uh okay. The Oracle holds at 1.5. It pushed. It remains positive. Um, the move is orderly, channel bound, rather than accelerating into a true extreme phase. Um, Sustained upside with increasing slope or a more aggressive separation from the channel be required. Okay, I uh, I agree with that assessment. We both stay the same. Easy enough. Let's move on to short term. Anybody else want to weigh in on their current score chart? 1.5, Stephen D. Okay. Was playing with the simulated platform, experimenting with a 0-day time frame. The options were three. Not sure how I did it, but it was fun. Oh, there you go. There you go. All right. Yeah, 0 days just means that the option will expire at the end of the day, but it trades up until the end. And depending on where it is relative to intrinsic value, if you're right at the money, you should still have plenty of opportunity there. Let's see here. What are we looking at next? Let's pop back down to the 6-month chart. And I actually said here that I might do a half a point, I believe. 1 point. I mean, it's as of right now, kind of holding this pretty steady. For a up, down, up. I mean, we kind of, yeah, I don't know. That's as good as anything. Um, okay, let's get a picture. I kind of feel like even last week was strong enough for another half of a point. I'm gonna do it. I'm going 1.5. I think I'm a little behind. So I'm gonna put my score to a 1.5. I'm gonna do it another half a point. So this is an acknowledgement by me that my score was a little bit lagging what price action was actually doing. I'm now a 1.5. Now the Oracle is at a 1.75. So does it jump to 2.25? I don't know. I mean, it is a pretty strong looking short term trend. I'd like to hear from the group. Where are you putting yours? Let's go see what the Oracle said. A 2.0. That's fair. It only expanded Gabe's a 2.0. So's his AI. Okay. I'm at a 1.5. There's closure happening there. It went to a 2. I'm at, so it's at a 3.5 on trend. I'm at a 2.75. Okay. Not bad. Stayed the same. I jumped a half a point. Oh, sorry. It jumped a quarter. I jumped a half. Let's go look at volume. Let's go look at the volume. Let's go here, here, I'm going to take this to 7 days. Nope, I keep doing that. Timex is 7. Okay, let's get a picture. It's for me going to stay at a 0.25 because there's no new volume. Good scores so far from the Oracle. Very solid. I feel like it's a solid read. Chart 0.25 for Stephen D. Sandy also, Steve also, Scott also. I mean, it kind of has to be. See, I'm gonna have to because again, it's there's not enough volume. It's scoring the price. None of these were above average. And you can see this is why we have to intervene. This is not an analytical disagreement. This week produced one qualifying above average candle. Well, let's go make sure. 1, 2, 3, 4, 5. No, 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 no. Your analysis is incorrect. There are no new candles above average last week. Only one for the entire chart. So the 0.5 score needs reassessment. We'll keep it tidy. You're right. That should not be a 0.5. There were no new qualifying above average volume across the visible chart. There is only one qualifying day, leads modestly, but no fresh volume or clustering, blah, blah, blah. Now, at this point, here's what's interesting is if I would have, so we're both 0.5s because he just needed to see it the right way. If next week we get an above average volume day, I am going to take it to a 0.5. And I actually find that, but now if we would have had 2 here, it would not be a 0.5. It would still be a quarter. But if I get 1 here and 1 here, you might be like, well, that's still just 2, but it's 2 different clusters, right? It's like we had one surge here and one surge there. So that's a little different of 2 versus 2 and 0 than if they were on the same at the same time. It might just be like follow through or, but here it's confirmation of something differently. So, all right. John says, do I think the increase in retail traders can move the market when institutional buyers are quiet? Well, I think that institutional buyers are quietly consistent. Quiet institutions are buying institutions. Because remember that every week institutions are getting fresh influx of capital, right? Retirement contributions come in. I mean, it's not like it's ton, but there's always a steady supply of institutional money coming in from areas, different areas, and so if they're hedging, they sit on that new capital because they don't work against themselves. They don't hedge and buy. They hedge and they realign and clean up, and then they And then when they are done hedging, what do? Right now, you can see they're done hedging, or at least they've significantly reduced hedging. And now we're seeing them what? Well, they're back into buy mode, right? Already. So yeah, I feel like the retail is there, but the institutional is there. They're like I said, quietly consistent. We're seeing them sitting in, and we're going to obviously go scored on the VIX here. But yeah, good question. Yeah, I just there's not much activity. Though we'll have areas marked for when we say if this happens, then we're going to be like, oh no, we don't like that at all. So I do what I would say is this: I do think that this could get to a 0.5 by giving me one here and then giving me one here, and we'll see what happens. Well, maybe it doesn't. This could ride at least 2 more weeks before I'm like it's too stale. Then we'll drop to a zero. If we have a passive tie, meaning no buyers, no sellers, a passive tie, volume will just be zero, which is fine. We don't have to have volume to have a positive score. And in fact, the stronger the trend, the less I expect volume to be a part of the equation. Anyway, okay, let's keep going. Good conversations, good questions. Keep asking them. I'm going to take this back out. Major market. I'm at 0.75. The Oracle is at 0.75. I don't know. Stephen D, did you get to a 1? I think Stephen D might be at a 1. Maybe there's a prediction for it to get to a 1. I don't know. We'll see. Let's go take a look. And where am I? There it is. Okay. What do I see here? Stephen D is a 1. Gabe and his team are 1s. Oof, look at this. Okay. Sandy is the original major market pressure campaign that pushed us to our first 1 ever in that section. Sandy's only a 0.75. She's like, no, I don't give it easy. You got to earn it. I'm with Sandy. Charts. There's 1. But it does look good so far. Russell on the top, NASDAQ second, S&P in the middle. The Dow kind of lagging behind. That's a very classic bullish representation. 133, we've got the Russell. Now, here's the deal. The NASDAQ is leading, but barely, right? It's not like it's like, oh, it's like barely. It just barely popped up for the first time in a while, right? So is that as good as it gets? No, as good as it gets. That red's up there with that blue. So do I recognize this is good and it's solid and it's and a 0.75 is quite a good score? Yes. Is it the best score it can be? I see even here where this would need to be up in this area higher and longer than it just barely popped its head above. That's my take. That's my take, but I trust you guys in your analyses. And I'm curious to see if the Oracle decides to take it to a 1. Chart number 2. Let's go down to 66. And this looks quite strong. This looks great. NASDAQ up top, second, third. This looks fabulous. I agree. Very strong. Very strong. And a 0.75 is a very strong score. Um, and you know what? There's no rule that you have to work in quarter point increments like I do. You might decide, Scott, I'm getting a little more granular. I'm going to tenths. So you might be like, this is a 0.8 or a 0.9. Just score. You do whatever you want. 7/16 breath sets. If you want to go four decimals, you go four decimals. This is a 0.8765. Okay. Nobody's going to tell you otherwise. It's your analysis. This looks now this looks a little bit like the small caps. God bless them. They did their job. They helped carry things, but they look a little tired here, if you ask me. Still strong. I have no problem with it because this I don't even score this. This is a tiebreaker. I'm just saying, what do I see coming down the pipe? I see a little bit of small cap. Like, woo, we're tired. We can't carry. We're so little. We can't carry everything for so long. All right. Let's run it. I'm 0.75. I need more. I need more to be convinced. And I would say the more I need is on the 133. I would actually, if I had the 133, I wouldn't need. I wouldn't need the 22 because the 22 would only be like, are we sure? And then we would look at the 22 and be like, oh yeah, look, but anyway. The Oracle agrees. This is a hold, not an upgrade. You do not get to keep upgrading just because things look strong. That's good advice, Oracle. I agree. This is a hold. We have leadership. Everything looks good. It's not incrementally stronger than the prior period. We confirm and sustain posture without adding new leadership breadth or structural improvement. The 133 still a little bit iffy, and the 22 is a little bit iffy. So I agree with this assessment. It's doing well. It's not quite there, but I'm open to it getting there. Good one. That was a good one. Let's go now to sector rotation. And any other comments for major market? I felt like, the if you took an average of the group, good boy, Oracle. Good boy. Well done. Here's your treat. I think the average for the group would probably be like 0.875, like right in the middle. There's some ones, there's some 0.75s. But what do you notice? Nobody's like, oh, I'm only seeing a half a point there. Clearly, it is risk on strength positioned in that environment. Clearly. Okay. Charts. Let's go here. Okay. Major market has been strong, Russell. Okay. Nasdaq for sure. Russell's had a little, as we just saw on the 22. It's a little okay. What do we have here? We have energy chopping around from the conflict, but more down than not. We have sector rotation, very bullish for technology right now, very strong. And remember, if technology is the only bullish, I'll still give it. It can carry. It doesn't need anyone else. And right now, it doesn't really have anyone else on this. There's industrials and materials Utilities is pulling back. Communication, like you can't see much else, right? Financials are down at the bottom from this chart. Still quite a shakeup on the sector side. We're not seeing a real clear shift of where the institutions are moving their money. Energy, strong still. Materials, strong still. And then industrials behind. And then here's the first growth surge. We're just barely seeing it coming into play. Below that, you still have residual defensiveness on staples. You've got utilities retreating, discretionary, financial. So you're still not really seeing much shift here. What were we? I want to go before I know. I want to kind of get a sense of where we were. I'm a 0. Okay, we're both. I'm a 0. Where's everyone on this? Is anyone positive yet? I don't see a lot of shift. I'm okay, but to be fair, as I said, Steve C, I'm kind of going that way too. I feel. Oh, I haven't taken any pictures. Sorry, I don't know what I'm doing. Let me go back and start over here. 200. I think that there's enough NASDAQ strength, technology strength, that I am going to let that give it a quarter of a point. What do you guys think about that? It's not often that I find myself more bullish than Stephen D, who is still a minus 0.25, but I feel like this might be the spot where I am. Here's the 133. Let's go to 66. Make sure I'm on. Was I all the way over on the 133? I think I was. Let's just go make sure. 30. Yeah, I was. Okay. This one. Nope. That's the wrong one. I added another one of these. Sorry, I'm getting myself all mixed up here, you guys. Okay, we'll talk about this one again now. And I'll tell you why I'm leaning towards because I mean, with nothing else there, but remember what I said, Stephen D. For me, technology can carry alone. It's the only sector that I will score a quarter of a point as a leader by itself. Like if financials were leading by themselves, still a 0. If consumer discretionary leading by themselves, still a 0. It missed on the 133. Let's go take a look. Maybe you're right. Maybe it's not enough yet. Well, it's not the leader, meaning it's not where energy is. And I don't expect it to. I don't need anything to get where energy is. We know why energy got where it got, when and why. I don't need it to be the top. I just need it to be, you can see it's surging the most and it's in second. So yeah, I'm good with that. I'm actually going to go ahead and give it the quarter of a point. You can see additional confirmation there, I think. So yeah, let's run it. Let's run it. And I'm going to go ahead and put that quarter of a point in for me. There we go. Peter, have a great rest of your Sunday. We'll see you tomorrow. Anybody else want to weigh in on this one? Where did everybody end up? Steve C's a quarter. I'm a quarter. I think there's some zeros. Stephen D is a minus 0.25 still. Well, what's the consensus here? Let's go see where the Oracle. I could see the Oracle putting a quarter of a point in. There you go. This does push the structure forward, though not as much as it might feel at first glance. Technology accelerating and separating. Industrial stabilizing and turning up. What's still missing? We're lagging financials. These are good, but they're not breaking down. Stephen D, as you said, mixed on the 133. Model progression. I think this makes sense. First real expansion of leadership. The market's behaving like risk on, not just recovering, but it's definitely early stage risk on still, not fully confirmed if financials or consumer discretionary. Then we start to get a path to 0.5. So there we go. That is the sectors. A 1 on sector rotation, Gabe. That's like the strongest it could be, or are you looking at a different characteristic? Okay. And lastly, I mean, look at this again. Even this last week, we're going to get at least 0.75, maybe still one more. I was like, it feels like maybe we're going to have a slowdown in our posture score improvement, but no, not at all. It's pushing us right back into a solid spot. Let's move to the VIX. Oh 05, 10, 26 chart. Chart plural. Oh no, chart. Sorry, I'm on sector rotation. Did I move this to the VIX? Yes. Remember last week we gave it like a hey, do you want it with or without stochastics? It's like, yeah, just give it to me without. I was like, nice. That's a good answer. It's like I don't need that. I don't need it. If anyone wasn't here last week, I'm gonna put this in here. Let's analyze ours. Mine's staying the same. 1, 2, 3, 4, 5. I I don't really feel convinced that it's like turned down. I don't know. I could see, you know what? I could see putting this. Yes, you could make an argument that this is, that this was a low and that now this is and this is continuing to come down. And if that's the case, that would be a 0.25. The hard part is it didn't get below. It really just kind of stayed right in this same level. What's everyone doing here? Are you giving it or not? I'm going to go see what the Oracle says. No change. Yeah, I'm gonna let the Oracle be my tiebreaker. I'm gonna let it. Yeah, I'm gonna keep mine the same. I think you could it could be an argument for it if someone made it. If someone's like, "Oh, I gave it the quarter point bump," I would be like, "Yeah, I get that. I was right there." However, I think that this is good confirmation. I like that the Oracle really this was a good one for me where I'm like, all right, I want the Oracle to help and then see how it comes and what its rationale is. Um, okay, yeah. It reflects a calm environment. The pace of compression has slowed and is now drifting sideways rather than pushing into deeper calm. No sign of fear, but no new improvement. Constructively low volatility. Stable in the 16 to 17, below the moving averages, flattening after decline. No re-expansion attempts. If we move towards 14, 15, then we're in the lower zone. We'll improve it. If it goes back up above 18 and a half, 20, we'll lower our score again. I think this makes a lot of sense. That makes a lot of sense. And we finish up at a 0.5. Okay, yeah. The Oracle went up a half a point. I went up 3/4. And this is where we find ourselves. 4.5 for me, 5.25 for the Oracle. Stephen D is a 4.5. Stephen D, nice to see you. Steve C as well. Okay, who's the most bullish? Who's the least bullish? Since I'm assuming we're all probably at least above a 3. 4.25 for Sandy. Woo! Gabe is bullish. He's a 6.5. All right, there you go. There you go. I like it. Anybody showing concern that we're not talking about here? Something in the market where you're like, but what about X? Let me know. Otherwise, let's go take a quick peek at what do we have coming up this week? Let's just real quick talk about last week. What do we have? So for jobs, all the things that happened. We were expecting 6.8 million and we had 6.87, a little better than expected, very close to the prior number, still hovering around 7 million. Do I post current posture outside of the recording? Yeah. If you go into the recordings and summaries, so you don't have to watch the recording, I'm assuming. It makes sense. But if you come here, you'll notice everything about the postures is listed out here. And I usually, and in the email, I email this, I post it and I email it to you. So if you look at your Sunday email, it will have all of this stuff here, and it'll have a picture of the market posture of mine and the oracles. So if you ever are just like, I don't want to have to watch, but I want to get a sense of it, you can go look at the email and just read a quick summary. So there you go. Hopefully that's the question you were asking. What are we looking for here? ADP last month was 61, expected 84. We got 109. Jobless claims still in the low 200s, right at 200,000. And US was at 185. big surprise last month. And the economist said, you know what? It looks like it's only going to be 55. And then we got 115. So we got 60 better than expected. Unemployment rate holding firm at the low 4.3 number. The employment data was strong. What do we have coming up this week? I believe we have some inflationary data. Nothing on Monday. No one cares about existing home sales. Tuesday, CPI, which means on Wednesday, probably PPI. So we're also getting back into back-to-back, the numbers coming in the right time. Austin, and we have the hallowed Sir Dr. Austin Goolsby. What are we looking for on inflation? We're looking for a drop from March to April. That's odd. I'm not sure about that, but an increase year over year, a slight increase in core, slight increase in core. We don't have projections for the year over year numbers or the core year over year numbers for PPI. Thursday, standard jobless claims, retail sales. Friday, that's really it. We're going to be watching Tuesday's inflationary data to see what it says there. Okay. Let's go. We've talked about the trading plan. We've talked about next week. All we have left is our watch list. Let's get one built. El Jago says, although the posture score rose, this review tells me to be modestly risk on. Yeah, I agree. It's still modestly risk on. I don't think it's, especially if you feel like things are a little overextended, with a focus on technology. Agreed to both of those. I like that. I like Apple on a pullback. I'm going to put it on the list, especially now that it's doing well. Archer Daniels is flagging, still looks good, even though some of the defensives are not doing so hot. I'm going to leave Applied Materials off due to earnings. But at this point, this thing is getting very close to the end. And if anyone still has this trade on, you should be able to book a solid gain on this next week before earnings comes. AMKR sideways. Amazon looking good. And again, I want you to notice Apple is strong. Amazon is strong. ASX, I'm still riding this. Let me know if you still have a piece of yours. I took a piece. I took some, and I still think that I have a chance of getting up here to this higher area. So, and I still think it looks good for new potential trades. Okay, let's see. AXP sideways, Baba earnings, BAC. So this was an alert trade. It broke support. It was already on the second hiccup. It tried and sputtered, and as it rolled over, for me, that was the end of the road. Yeah, it just, sometimes you eat the bear and sometimes the bear eats you. Hopefully you kept the loss under control. BCS, no. I actually did hold Citi. It did not break support, and it's on the first. So if it sputters and then starts to go from here, and then financials recover, I will have gotten out of my BAC, but gotten into a new one on Citi that will actually capitalize. And if it falls apart, then I'll be ready to close this one too. Caterpillar still looks strong. It's an expensive stock, and the options were not very liquid, but it can change. If you start to see volume tick up, I'm going to put it on and let's give it another look. If it gives a signal, we'll take a look. CF, no. CIN, yes. I like Sienna. It's in a pullback. It looks like it could set up. Coherent, I like Cisco, but it's got earnings. So we'll see what happens here. This one got my target. This was a great trade. If anyone else took this one, was not an alert, but it was one that we talked about and have been looking at. I believe several people had a piece of that. Delta, Diamonds, Dow Chemical, maybe. GE, I think you could. I think GE is setting up for something here. Nice gap up. Now it's pulling back a little bit. We'll see what happens. Gold, General Motors, still kind of moving a little bit. Google is fantastic, but it needs to pull back. I will put it on the list to help guide it towards us for a trade. Okay. Let's see. Goldman sideways, Intel strong, but pulling back. I mean, we'll see what happens. I think day trades have a go. Swing trades right now, be very careful. This thing is highly volatile. IWM, nice. Got a piece on Friday. I love it. IWM still looks good. Lumentum on a pullback. LRCX. Definitely looking for something again on this one. That one got to a target that I had drawn. I've got another one ready out there to see if it pulls back and gives something here. Okay, let's see. MasterCard, no. Meta, no. Monster, Monster had a good earnings, but nothing for us there. Marvell, no. Micron, same as Intel, but it's not really tradable other than in a day trade fashion right now. Nvidia looks pretty good. Yeah, a lot of strength, isn't there? I agree. But a lot of things overextended. So if we have, a pullback or something, we wouldn't be shocked. You can see part of that moderate risk on mentality is a lot of things are in these overextended circumstances right now. Okay, not a chaser. Press agreed. Agreed. Rocket Lab. Rocket Lab was interesting. Ross Stores. I still think Ross Stores looks okay. I mean, it's a longer term looking positioning. RTX is down. Silver, SNDK is strong. The SPY is strong, but what? Strong, but overextended. Our list is smaller this week. Why? Because things are not in a great position for buying. STX looks good for a pullback and would be tradable after that. Tesla made a great move. We talked about that. A few people capitalized. TSM, UPS. I think UPS. So as this market looks ripe for a pullback because it's overextended, and I see something like this, little dead cat bounce. And I think where could this end up over at this 90 level, which is about that same drop? Yeah. I'm thinking something along these lines right here. Gas is higher, so it costs more to deliver packages and more people are doing it, so there's more competition. Not a great environment. So as much as ironic as it is right now, due to overall conditions, um, I'm not looking for bullish swings over the next day or two due to the market being overextended. I might look for a calendar spread, or I might look for a put on something like UPS. Give me your thoughts on if you would be open to something like that, or just something to watch and learn from. Viking Cruises, VOD, still trying. Gonna give it one last little bit. I took a little more off, and I have a little more to go. Hunt of Virus Cruises, right? Exactly. WDC still strong. Put for UPS. Yeah, people are feeling it. All right, I like it. And I like Walmart. Let's put this on the list. Okay, so we have an okay list. We have a market that is really kind of feeling like it's a little overextended and we want to be careful with it, but it is bullish. It's improved to a certain point, which means now one-offs for bearish trades like the UPS, though we are looking at that. Possibly introducing some new strategies such as calendars that work better in a low implied volatility environment. This week we're working on analytics, and that's going to do it for me. It's great to see everybody. Have an amazing rest of your day. Go celebrate the mothers in your lives, and as always, happy trading.